Hello students, this is Gary Templeton again, and I will be covering the case Aura, the Power of the Pivot. In September 2019, Serese Selanders reached a pivotal point in the development of Aura, the personal emergency response company she had founded several years earlier. For our purposes, I'll refer to these devices as PERS, which stands for Personal Emergency Response Systems. Having started the business with intentions to disrupt the growing PERS industry while helping to improve the lives of older adults and their caregivers, Selanders created the Aura device, a customized hardware and software product. The product and the company went on to receive considerable positive feedback and publicity, but sales were disappointing. Selanders brought plenty of experience, skills, and innovation to her business and also identified an important new market segment for her product. However, she was well aware that technology startups were notoriously challenging to start, grow, and maintain. Selanders now feels that she has reached the end of the line for her business and has to make a decision about its future. She has to identify opportunities and threats in the market and determine if the company has a sustainable competitive advantage. She also has to decide whether to focus entirely on the new segment she has identified or make a new strategic move and raise another round of funding for growth. Alternatively, she wonders if she should instead sell the technology or the entire company and resume her executive position in the financial industry. The case study provides an opportunity to analyze the medical alert device industry from the perspective of a technology entrepreneur using strategic analysis tools including Porter's 5 Forces framework, the value, rarity, inimitability, non-substitutability, and exploitability or VRINE, V-R-I-N-E, model, the Ansoff matrix, financial analysis, and enterprise risk mapping. After reading the case, you should be able to identify and analyze business risk and opportunities in the medical alert device industry, identify and describe a company's resources and capabilities, understand a company's product market fit and strategic positioning, understand the concept of a strategic pivot, and understand how to integrate both environmental and enterprise analyses when making strategic decisions. This case study integrates the topics of entrepreneurship, business strategy, and technology product development. It explores internal resources, external environmental analyses, and integrates both perspectives in strategic decision making. This is a field case about an actual technology startup company. Using Porter's 5 Forces framework, identify and analyze the external opportunities and threats of the medical device industry. Porter's 5 Forces framework identifies and analyzes the major competitive forces that shape an industry: competitive rivalry, threat of new entrants, threat of substitutes, power of suppliers, and the power of buyers. Use this framework to think about the external opportunities and threats that Aura faces. Overall, the PERS industry is an attractive market, although the threat of both well-capitalized competition and technology substitutes are significant and growing, with each industry force indicating at least a mid-level threat. Large competitors hold significant market share and strong brands. They are able to acquire new startup technologies or entire companies and maintain sizable marketing budgets. Technology is accelerating quickly, and products and services may be rendered obsolete before the company can capitalize on market success, despite incurring significant developmental costs. The health and safety nature of the industry creates further scrutiny as it relates to regulations and publicity gained from success stories. Skilled labor and outsourced production requirements have been stable for the company but could prove problematic in the event of growth. The complications of integrating technology with aging consumers, plus the somewhat complex systems and pricing models, create barriers to adoption. Further, many consumers are reluctant to use the devices despite the obvious advantages of potential safety benefits and easing caregiver concerns. Although the industry is mature, a growing population, aging consumers, changing lifestyles, and technology offer opportunities. The status quo of existing products and market conditions seems ripe for disruption. Aura had found success locally with strong trials, publicity, and industry support. Intellectual property protection through patents has yielded some barriers to imitation. The cost of leveraged capital is historically low and technology investments are prevalent. Trends of independent living, active lifestyles, and increasing technology adoption are promising. The fashionable aspect of the product and one-time purchase pricing model have been well received but are somewhat simple to imitate. The company's pivot toward the new market segment of consumers who work mainly alone, referred to as lone workers, offers an opportunity for growth and opens a business-to-business channel. However, in the early stages of execution, the strategy's success has yet to be determined. Clearer differentiation of the two market segments must be explored further. Overcoming the customer stigma of the product and gaining national or international growth will be challenging. The stigma has proved to be a significant barrier to growth, and gaining international success is needed for market success. The question of whether it is wise to sell the technology or the entire company is worth exploring. Acquisitions are common growth strategies, and the small regional company could benefit from the branding, distribution, and capital of competitors. Selanders' further commitment and some market traction in terms of sales will help the company sustain organic growth. Using the resource-based view, or VRINE model, identify and analyze the internal resources and capabilities of the venture. The VRINE model analyzes the resources and capabilities of a firm using the following factors: value, rarity, inimitability, non-substitutability, and exploitability. Overall, Selanders has drive, skills, and connections, coupled with a patented and fashionable product and service combination created by her own team. These are the company's key resources. Various funding sources, local industry support, and mentorship have yielded a temporary advantage locally, but only parity internationally, as has the positive publicity. Selanders' sincerity and authenticity would only benefit the company in an era of increasing corporate scrutiny. The plan to pivot the company's consumer target toward a new lone worker market segment is innovative and has the potential to capitalize on the business-to-business sales channel. Growing the scale of the venture would be challenging, given the vast number of individual consumers and large international competitors with significant market share. Solidifying corporate structure and team members may help to facilitate growth. The sales channel and pricing model offer potential opportunities for differentiation through the lower one-time pricing that resonates with some consumers, but it means foregoing the cash flow benefits of ongoing subscriptions. The lack of a storefront or retailing partner may limit growth, particularly with older, more traditional customers and their associated purchasing practices. Creating a sustainable competitive advantage from the fashionable attributes of the product may be difficult, given the potential imitability of the Aura device. One single product in two markets could help achieve scale, but it also potentially constrains resources and confuses customers. Product branding has a strong foundation, and there is brand recognition in some markets, but it would be challenging to scale or increase in size. Decreasing liquidity and increasing debt are somewhat concerning prospects. Selanders has proven resilient and innovative, but her stamina is being tested. The most pressing issue is to address entrepreneurial commitment and funding concerns. Significant competition coupled with rapidly changing technologies and emerging substitutes will be difficult to overcome with limited resources. Using the financial information provided, conduct a ratio analysis of the firm. Financially, Aura is slowly becoming profitable, although stability is still uncertain. Revenue received from assistance grants is an important source of capital, but the amount is somewhat misleading and not likely sustainable. The company has decreasing liquidity and increasing debt, which may be characteristic for a growing business. Margins and returns are stable but need further fund growth. Marketing expenditures have increased but need significant investment given the competitive landscape and global consumer base. Selanders can consider debt or equity capital to grow the business given the current favorable trends of abundant venture capital for technology startups and the low cost of leveraged funds. Using the Ansoff matrix, identify the product market fit and strategic positioning of Aura. The Ansoff matrix is a strategic tool used to plan company growth given four alternatives: market development, diversification, market penetration, and product development. Observe the following. Market penetration in the elderly and disabled segment has proven challenging, although Aura can look at potentially new ways of marketing, pricing, or alternative retailing to gain market share. Selanders has successfully extended the existing product's reach into a new market of lone workers, thus creating a cost-effective growth opportunity. However, further development is needed for branding, sales channels, and customer requirements and support. Development and penetration into the international market can offer great opportunities, but this strategy is constrained by limited resources. The singular product and service could be difficult to grow into a larger, self-sustaining business. However, product line extensions and increased services can lead to product development and diversification. It may be necessary to invest in sales and marketing as well as brand clarification for growth in new markets. International growth would require economies of scale and scope. Selanders must monitor and incorporate new technological developments to maintain and grow a sustainable market position. New product features or services could help the company's product development, and they may be necessary given the age of the current products. The option of selling the Aura technology or the entire company may be the most realistic way to achieve diversified growth in new markets with new products. However, Selanders is a compelling catalyst for new ideas and has demonstrated an ability to pivot the business as new opportunities arise. Therefore, two key constraints for this strategy to succeed are entrepreneurial commitment and funding potential. Summarize the acute internal and external analyses in an enterprise risk map. The most acute risks are related to Selanders' endurance, Aura's competition, and the company's finances, which have high impact and probability. To sustain her company, Selanders needs commitment and further financing, ideally through operations, although significant debt or equity capital would also stimulate the company's growth. Selanders can explore new sales channels and branding. However, the consumer reluctance to use the Aura product seems to be beyond the founder's control. In addition, Selanders faces an ever-present threat from the well-capitalized competition in the market. Investment in human capital could also help to stimulate growth and innovation, while lessening the burden on Selanders and on outsourcing risk. Monitoring and incorporating new technologies requires the company to remain sustainable, but the health and safety nature of the industry adds greater complexity to the business. However, a trend toward health and independent living, coupled with an aging population, is a positive indicator. Using the completed internal and external analyses, identify Aura's strategic options and recommend a future course of action for Selanders. Managers have options that will reflect differing risk and return trade-offs for the company. Think about Selanders' commitment to the venture's future, which is a critical point considering her impact on Aura's success to date. If Selanders decides to leave Aura, the sale of its technology or entire company is the most feasible option. If Selanders' commitment to the company and sourcing capital is confirmed, Aura can solidify its management team and outsourcing functions, particularly in terms of sales and marketing. Reducing the burden on the entrepreneur and increasing human capital could very well improve the outlook for the company. The financial situation of the company likely requires immediate attention. The assistance grant revenue that the company has received from governments and other sources is important, but it is unlikely to be sustainable over the long term. Based on its relatively low debt ratio, approximately 0.5, Aura is currently financed more through equity than debt, which allows the option of additional leveraged capital, particularly in a low interest rate environment. Deriving growth capital through cash flow from operations would be ideal for the company's sustainability. Total revenue is increasing, which is a promising financial indicator, and securing a significant business or wholesale client could be a turning point for the company. The most feasible strategy in the short term might be to invest in sales and marketing to increase market penetration of the Aura device and market development of the Aura Pro product. This will enhance product development or diversification opportunities. Better brand distinction between the two products will also add clarity for customers. In the PERS market, the company should appeal to caregivers for now and transition to target more technology-savvy aging consumers over time. The company can consider industry collaborations in retailing or distribution to grow in new markets in the short term. Over the medium term, the company can revisit its pricing and distribution models. Large, well-capitalized international competitors in the PERS industry are a serious threat that may be difficult to overcome with proprietary systems or fashionable hardware. The fashionable aspect of the product has been a pivotal differentiator, but suffers from poor inimitability and may not resonate with the lone worker market as it did with older adult and disabled customers. To reach male consumers in particular, the fashionable aspect of the product may need to be articulated. The company can also consider securing a retail distribution partner to increase sales and brand profile. However, business-to-business bulk sales might be most cost-effective in the short term. To maintain and grow a sustainable company, Selanders must monitor and incorporate new technological developments. New product features or services, which would help with product development, may be necessary considering the age of the current products and ever-present competition and substitute products. Additional product or service features targeted to the lone worker market might extend the life cycle of the product. As noted earlier, branding between the two market segments has to be addressed to clarify confusion and differentiate among Aura and Aura Pro customers. So what happened? After the writing of this case, Selanders decided to pursue the new lone worker market segment in which she saw great potential, but realized she had to first address the issue of brand confusion between the Aura and the Aura Pro devices. In the PERS segment, consumers seemed confused about the product's pricing plan. In the new lone worker segment, there was some concern about the quality of the offering, as well as additional fees compared to the company's similar product and service. Therefore, Selanders decided to tackle both issues by creating a new brand, Solus Guard. The Solus Guard product provided clarity by focusing on bulk sales to businesses, thereby also significantly increasing marketing expenditures and efforts. Solus Guard incorporated the industry software standard of checking in and checking out, which was a necessity for the lone worker segment. The company also included a customized monitoring service for enterprise users to fulfill industry legal obligations. Selanders was also working on further innovations in satellite technologies and back-end administration. This new business-to-business approach helped to reduce individual customer onboarding costs. The company offered a line of services that accompanied the new Solus Guard product to better meet the needs of the market, while also using a new pricing model. Instead of solely relying on the hardware revenue, the business offered an a la carte model, where customers could purchase the hardware at a lower cost and then select from a variety of available services at additional cost. The tiered pricing model met the needs of consumers and yielded higher monthly sales revenue. This change transitioned the company from a one-product hardware company to an integrated technology business. The company's ability to pivot the business to effectively add a new product resulted in favorable sales growth in the new market. By early 2020, the Solus Guard product had already secured sales contracts within 55 organizations, confirming the product's fit with the new market segment. The introduction of the Solus Guard brand was an example of a company's effective and critical business pivot, which Selanders had mastered since the start. After the technology she developed for her startup's initial market failed to achieve her desired results, Selanders had three options: pivot the company in terms of its product, market, or business model. She chose to pursue all three areas. First, she developed and built a new product by customizing the hardware to better meet unfulfilled customer needs, which required significant financial investment and time. Second, she pivoted her company to reach consumers she identified in the adjacent market segment of lone workers. This pivot yielded favorable results but required a different value proposition and associated business model. Selanders attempted to simultaneously operate both the one-time device sales business model and the subscription service framework, but inadvertently created confusion among consumers regarding the company's value proposition and its perceived core competency. Third, Selanders created a new business model and unique brand offering. The new business model and associated brands features captured value in the new market. Selanders also continued to market the original Aura device to older adults, disabled consumers, and caregivers, as has been her original mission. However, her approach was much more passive, with more marketing dollars reallocated to the new Solus Guard product. She maintained her commitment to the business, while acknowledging the ongoing risks and high failure rate of technology ventures. To conclude, this is a classic case of a company generating revenue using a more traditional model and then finding out that its own technical competencies are also worthy of marketing as its own unique service. Thanks for listening.